Hello, good morning students. Today we are going to start our new topic, that is a partnership final account. So before we start our topic, we know what is mean by final account. We saw that in last year proprietor's final account. Now we are going to see partnership's final account. So these are contents of partnership final accounts. So in partnership final accounts, we'll do that all transactions like a closing stock, outstanding expenses, prepaid expenses, income received in advance, income receivable, bad debts, provision for doubtful debts, reserve for discount on debtors and creditors, depreciation, interest on capital drawings and loan, interest on investment and loans given, goods destroyed by fire accident, goods stolen, goods distributed as free sample, goods withdrawn by partners, unrecorded purchases and sales, capital expenditures included in revenue expenses and vice versa, bills receivable dishonored, bills payable dishonored, deferred expenses, capital receipt included in revenue receipt and vice versa. Commission to working partners on the basis of gross profit, net profit and sales, etc. Okay, then in this chapter, in this part, we are going to understand what is mean by final account and need and importance of final account, effect of adjustment in final account, then what is mean by trading account, profit and loss account and balance sheet, and the how to find out the financial result of the business. Okay, so first we are going to our introduction part of partnership final account. Last year we saw proprietary final account. So this account is also same, but what is the difference in proprietors and partnership final account? In proprietary final account, there is only one person who can take care of the company or business, and in partnership final account there are two or more than two people will take care of company or business. So as per the sole proprietary concern, we will also prepare the final account of partnership firm. In the statement and position statement, final account is the last stage of accounting procedure. Generally following steps are followed in the accounting. It means what ki final account is the last stage of accounting. In your business you are recording all transactions to the accounts, and then lastly you are making a final account. Why we are making a final account? To calculate a gross profit, gross loss, net profit, net loss, and what is how much assets we have and how much liabilities we have to give. Okay, these are steps of final account. Prepare of journal subsidiary books, we saw this in a last year. Preparation of ledger, preparation of trial balance considering adjustment, preparation of final account which consists of, in final account we are making three accounts, that is trading account, profit and loss account and balance sheet. Okay, the next is necessity of preparation of final account. Final account is prepared for the following various purposes. Why we are making final account? To find out the gross profit or gross loss. Now I told you like that only, during the year. It means in this in last year, during the year, what gross profit or what gross loss we got, that we are find out from the final account. To find out the net profit or net loss, financial position of our business in this year, then amount of debtors and creditors, and the next is what future planning we have to make for our business good health. The next is sources and applications of funds and the value of goodwill for the purpose of reconstruction of firm. To calculate various taxes of the firm like income tax. Next is preparation of partnership final account. How we are making partnership final account? There are three accounts we are making in this. First is trading, second is profit and loss, and third is balance sheet. So first is trading account. Now we are going to see what is a trading account. Trading account is a nominal account. Trading account is open in the trading organization for the purpose to find out the gross profit or gross loss incurred during the year. In the debit side of this account, all direct expenses are recorded, and in the credit side of account, all direct incomes of the firm are recorded. If the trading account's credit side is more than debit side, then account shows the gross profit and vice versa. The gross profit or loss is transferred to profit and loss account. Okay, so see, there is a format of trading account. In trading account, see, there is a debit side, and the debit side shows what goes out from business, means what amount or what things we are going from the business, that is all things are coming to debit side. And what is the earning of the business, that is coming to the credit side. Like there is an example, buy sales, means what you are selling, how much you are selling from your business, so that much money you are getting from that person or from that company. So that this thing is coming to credit side. It means to debit side what goes out, and to credit side what comes in. We are doing the entry in that format. Okay, and what from a trading account will find out the gross profit and the gross loss. This gross profit or this gross loss we are writing in our profit and loss account. And if the company is getting gross profit, means the credit side is more than a debit side, it means we are getting a gross profit. So this gross profit we are writing in a profit and loss account. Okay, so now what is the profit and loss account? See, profit and loss account is the type of nominal account. Profit and loss account is a main account of income statement. It is prepared to ascertain the net profit earned or net loss suffered by a business concern during the accounting year. All indirect expenses are to be recorded to the debit side, whereas all indirect income are to be recorded to the credit side of this account. The credit balance on this account shows net profit, which is to be transferred to capital account. Credit side or added in capital. The debit balance of this account shows net loss, which is to be transferred to capital account debit side or deducted from capital. Okay, so what is a profit and loss account? Profit and loss account is also type of nominal account. Why we are making profit and loss account? See, this is a business, and why we are starting a business? To earn a profit. So that's why we are making here profit and loss account. And profit and loss account, it's a in profit and loss account we are writing all indirect expenses and all indirect profit or losses, all indirect expenses or owns things. So there is a format of profit and loss account. So profit and loss accounts debit side means what goes out, what expenses, that all expenses we are writing to the debit side of profit and loss account. And all incomes, which means what comes into the business, that is all things we are writing to the credit side of profit and loss account. Okay, and if the credit side is more than debit side of profit and loss account, that is our net profit, and this net profit we are adding in our balance sheets capital account, and if we are suffering the loss, that loss we are deducting from the capital or we are writing in a capital account. So this is our format of profit and loss account. Okay, we are getting a net profit or net loss from profit and loss account. And the next is balance sheet. Balance sheet is a statement showing financial position of the firm on a particular day. All liabilities are recorded to its left hand side, whereas all assets are recorded to its right hand side. The balance sheet is not an account but a statement showing the financial position of a firm as on a given date in the form of assets and liabilities. See, the balance sheet, it's not an account, it's a statement. Balance sheet showing us what is the position of our business. Okay, in balance sheet there is a left side, it's a liabilities, and there is a right side, it's a assets. From balance sheet we are knowing what is the how much liabilities we have to pay and how much assets we have in our business. Okay, balance sheet we are making in a particular day. So in balance sheet, left side we are writing all liabilities and right side we are writing all assets. Okay, and this balance sheet we are making on a particular day, and this balance sheet is showing our business position. So students, now we know what is the trading account, what is the profit and loss account, and what is the balance sheet. Okay, so now students, please make a format of these three accounts, and then there are some adjustments, what transactions we are doing in these accounts. These all adjustments are here, so write these adjustments in your notebook. We'll see this adjustment when we are solving our actual problems. Okay, these all adjustment till page number 21. Solve this, write these adjustments and the effect of the adjustment in your notebook. And the next is important point. Now some important points are here. We'll see. Each item from trial balance will be included only once in the final account, either trading or in profit and loss account, or in balance sheet, or in working section. It means the trial balance is given as your problem. Okay, so in your trial balance, each and every trial balance will, each and every transaction will write or effect will come only once in your final account. It should be come to your trading account, it should be come to your profit and loss account, or it should be come to your balance sheet account. Okay, but the effect is only one. When there is an adjustment, that time we have to give a two effect. Each and every adjustment have a two effect. Okay, please keep in your mind students. Again I am repeating, trial balance, all transactions effect is only one time in our accounts, but if there is a adjustment, that time for that adjustment we have to do a two effects. Next is debit balance of trial balance will appear on the debit side of trading account or profit and loss account, or on the asset side of the balance sheet. Okay, this will see in our actual problems, in actual problem solving. Okay, debit balance of trial balance will appear to the debit side of trading account, means the trial balance is given, so debit side of trial balance, all effects is going to debit side of trading account and profit and loss account or asset side of balance sheet account. Okay, and the credit balance of trial balance will appear on the credit side of trading account, profit and loss accounts, and capital account on the liability side of the balance sheet. These things we'll see in our actual problems. Okay, and read out other points also. Just read out it. We'll see these all important points in our actual problem. Okay, next is treatment of some important items appearing in trial balance only. There are some important treatments. These treatments we are writing in only and only trading account. Steps for solving problems. So we'll see that in actual problem. What is the steps? Okay, so students, till here write your points, write your notes. Okay, see, write an introduction, then necessity of preparation of final account, then preparation of partnership final account, trading account, then make a format of trading account, then write a profit and loss account, make a format of profit and loss account, and then balance sheet, write a format of balance sheet, and then write the adjustments till page number 21, and treatment of some important items appearing in trial balance. Okay, in our actual problems we'll see in our next lecture. Thank you.